What's up, traders? So let's do a complete multi-time frame analysis on gold. Let's see what kind of trading opportunity currently we have in this instrument. As you can see, gold from the lower time frame perspective, we have significant trading opportunity. Now, before we discuss how we can trade, let's look at the bigger picture to see the general direction in the market. And then we'll jump onto this lower time frame to see how we can trade gold. Looking at first of all monthly perspective to see overall picture in the market. Now from the monthly perspective, we see that gold is back to back after a big movement to the upside, now currently coming for a deeper retracement. Historically, what do you see that gold from this monthly level of support created this monthly impulse to the upside. Now when you see an impulse, you can expect a deeper retracement. Now, if we take our Fibonacci to see possible levels, we see that primarily gold has come to 38.2% Fibonacci level, and from that Fibonacci level, we have seen that gold has a bounce to the upside. Now, with that bounce, what we see that after this bounce, gold again sellers selling this market. The next zone that we can expect gold to come back is 50% Fibonacci level, which is highly likely to happen in gold as it is a long term bearish market now coming for a deeper retracement. We can expect at least another Fibonacci level 50%, which is highly likely to happen as this is the zone where we see from the monthly perspective at 1790 50% Fibonacci level, and also monthly 20 EMA aligning with this very important bullish engulfer, the resistance zone here, which is turning support. So quite a few confluences in this area for us gold to have a bounce or at least to come and test this level. So we still have quite a few pips to come down for gold to complete this Fibonacci level from the monthly perspective. If we look at the weekly time frame, we see what we have so far discussed is aligning with the price action and market structure. First of all, we see with this big weekly impulse followed by this dodgy, gold now started to drop. Now every week the price was creating series of lower high and lower low in this market. Now what we see from the weekly perspective is that there is a very important area of value. As you can see, quite a few weekly dodges in this zone where there is a gap opening as well. This level is quite significant. There's a lot of liquidity in this zone, and we can expect now gold to come down and test this level as a support before creating any move or even breaking down for a deeper retracement to test the 61.8% Fibonacci level. So gold is in a downtrend and there is a probability for the price to continue to drop. Now, if I look at the daily, we see a candle on the daily perspective, which is giving us potential for further drop. This is the previous day's candle, which is in fact a typical bearish engulfer. Now, there is a significant in this daily candle. The reason is firstly, if we look at the overall picture from the daily perspective, we see that after this big impulse on the daily, the price has broken out of this big long-term uptrending market structure, creating this reversal pattern here, has broken down. Now with that breakdown, what we have seen that gold basically has tested this previous support zone here, which is turning resistance. Now if you draw this level here in this, where we see that this support here, which is turning resistance here, which is quite significant in this level. Now what we can expect, as you can see, if you closely look at the red candles, we see that on the daily perspective the sellers are very very stronger. If we look at the green candles, we see that they're very narrower and there's a long wick at the top. So whenever the bulls are pushing that price high along this channel, we see that there is a sellers coming in the market and dropping this market. What we can expect, what I think that highly likely gold will drop from this channel in this direction, creating series of lower high and lower low to this level, and from this zone we might see even a further breakdown. So from the daily perspective as well, we see high probability for gold to continue to drop. So monthly, weekly, and daily aligning with potential bearish movement on gold. Now looking at further lower time frame on the 4 hour to see how we can find trading opportunity on gold. Now we see that Yesterday there was a huge liquidity gap with this long week candle from this resistance created this impulse to the downside. Currently the price is going up for a deeper retracement again. Now with that impulse in this downtrending market, if we place our Fibonacci again from low high to low, you see that currently the price is rejecting from 38.2% Fibonacci level. What we can expect at least a 50% Fibonacci retracement on gold in this direction. And then as soon as you will see price action confirmation along the zone, as there is a 4-hour 20 EMA, and also this level is quite significant from lower time frame perspective as well. This is support here, turning resistance, and from that level what we can expect gold to have a bounce to the downside. As soon as we will find suitable entry opportunity along the zone on gold, we will consider going short with a high probability trade setup with our students. Now, if you find value in this analysis, then smash the like button and also let us know in the comment section which way you are trading gold. Thank you. I'll see you soon in my next analysis.